Hello, everyone, and a very warm welcome to you all. Thank you for joining us for this latest BKL webinar on the subject of tax fee protection. So joining me, Anthony Newgrosh, we've got Chris, who heads up our personal tax team, and we're also delighted to welcome Sarah Rigg, who's head of operations at Vantage Fee Protection. So welcome, Chris, and welcome, Sarah.
Yeah, good afternoon, everyone.
Good afternoon.
So a couple of words of self-indulgence, if we may, apologies, but just a couple of words about BKL. We're delighted that following our latest merger with Wilson Wright last month, we're now up to nearly 400 people, we believe. We quite managed to get them all in one room at the same time. And as far as our tax team goes, another win this year, Chris, Best Business Tax Practice. That's the third consecutive year we've won at the tax awards from Tolly's. We also were best tax team at the Accountancy Excellence Awards. So delighted with that, and we very much see tax investigation coverage as part of our overall tax offering, and that's why we're delighted that Sarah is with us today. So Sarah, do you want to say a couple of words about Vantage and your good self before we head off into the main detail today?
Yeah, absolutely. So, first of all, thank you to both of you for inviting me along today to talk about the fee protection service. It is an insurance-backed service that we offer. We are, an insurance broker. So we offer, the service out to a wide range of accountancy practices, but obviously, with a focus on looking after BKL. I work closely with Chris on making sure that it all works really well. I also have an oversight of the claims team, so I see what's coming in across the marketplace, so good understanding of what's going on with HMRC. As I say, I'm head of operations at Vantage, but my background, I started my working life with HMRC for my sins, with 10 years there, but I've been in this marketplace for the last, over 20 years. So got a good understanding of how it all works.
All right. Well, thank you for that, Chris. Why don't you just tell us what we're going to cover in the next 30 minutes or so?
So obviously, fee protection services, we feel it's quite an important area. We want to make sure clients are aware of what the service is, what actually is going on in the market, what the revenue that's out there. Because sometimes it's disregarded. So we really want to go over what revenues targets, ultimately, areas of risk, and really good examples of why clients should have this service. It's not as simplistic as just thinking it's just a basic add-on. We see, and we'll give examples as why revenue are really targeting and what their objectives at the moment. So it's more just a brief conversation piece about why ultimately, and we'll hit these individual headings.
Okay, thanks, Chris. Just before we get into the detail, then, just to say, if any of you have any questions as you go along, please do feel free to type those into the question and answers section, which you should be able to access along the top of your screen. We'll do our best to answer those as we go along. If we can't answer them all, or we need to check a query for you, then we will come back to you. We'll do our best, and we will also send out copies of these slides and a link to the webinar that will be on YouTube as well. So you'll have the opportunity to listen to this all over again, should you so choose. So we look forward to your questions. But Sarah, I think, take it away, as it were. Yeah. What's the headline here? What is Tax Investigation Services? What are we talking about?
Okay, so that's a really good point, and I think, to just underline exactly what it is. It is an insurance-backed service that kicks in to deal with, your accountancy costs in the event that you get an inquiry from HMRC. So in that sense, in the simplest form, it covers BKL's time to respond to HMRC on the client's behalf and get the best possible outcome there. So I think, just why you would need it. In recent years, I think post-pandemic, we've seen a significant increase in HMRC compliance activity, which is becoming increasingly complex and time-consuming to deal with, as we've highlighted there. Just to put it into, simple terms, HMRC are in a bit of a mess, I think, you know, sort of in terms of how they are dealing with things. A lot of their inquiries are computer generated, and then it comes back into their team. I think increasingly it's difficult to get hold of the relevant people, get the answer that is required, getting a quick outcome to inquiries, and therefore more and more accountancy costs are being incurred in dealing with them. And in that sense, you know, it provides a peace of mind for the client. So in terms of, you know, sort of BKL getting involved, whatever they need to do, the policy will chip in and pick up the cost, without the client having to worry about extra fees, which are not part of the normal service. And in that sense, it enables BKL to go as far as they need to go in terms of defending the client's position without having to think about, okay, this is costing me money, you know, at what point do I give in, you know, and there are potential ongoing implications from doing that. So what might affect 1 year might affect a year moving forward, and if you concede, then it opens the door for HMRC to you know, to challenge things moving forward.
So Sarah, just jumping in there, one of the other points with this that we see increasingly now is actually strangely errors on the HMRC side.
Absolutely.
They will commonly make mistakes at their end and make assumptions. There's usually things around property disposals that may be completely non-chargeable to CGT, that you get questions that are asked, for example, and that's an area where we have to go back to the revenue and deal with those concerns or errors potentially on their part. And from our side, that's obviously a chargeable piece of work that we would normally recharge the client. And of course, from our client's side, they look at this and say, well, I haven't actually done anything wrong here, and we've made the right submissions, and I'm getting a bill through from BKL for dealing with that exercise. And, you know, obviously it's frustrating from both sides, in which case, and the idea of this service, it completely alleviates that worry from both parties. And again, coming back to, as we will touch upon shortly, seeing what the revenue are doing in terms of investigations and the way they are working, where a lot of it is automated these days, without, and even sometimes with, human interaction going on, there are still mistakes that are going on. So this isn't about a presumption of guilt or, you know, you've definitely done something wrong. It can be the other way around, where the revenue have made an error. And the last thing, we don't take pleasure of resolving those errors. And by the way, you know, client, here's a fee for doing so. I like that reassurance that actually client is covered.
Yeah, absolutely. And it's very commonplace actually for HMRC to you know, sort of open an inquiry where actually information does exist to support, you know, sort of the tax returns. So yeah, I mean, that's a really valid point. Okay.
All right, well, let's move on. Sarah, you did touch upon this. We are in difficult times post-COVID. HMRC are looking to raise more revenue, certainly being more aggressive. Do you want to just explore a bit further how they're sort of going about this?
Yeah, so a lot of the inquiries are actually computer generated, as I've sort of highlighted earlier. We see a lot of campaigns coming through. So again, you know, we get a good snapshot of what's going on up and down the country, and quite often it's the same letter from the same department, and it is a very much targeted campaign. They're profiling using information that is fed into what they call their Connect database. It holds like 55 billion pieces of information. They will pick up an area, profile that, look at, you know, sort of how that aligns with you know, sort of the tax returns, what's been entered there, and then automatically generate letters. So we're seeing an awful lot of that sort of thing coming through. It's not their only avenue of approach, but certainly it is something that they're very much reliant on, and I guess that reflects, you know, sort of the way that the modern world is moving. So we've got very much, you know, sort of targeted campaigns, and then when they do open the inquiry, actually then, because it's been computer generated, it's not necessarily owned by somebody, so it's then a case of, you know, sort of tying down, you know, sort of a conversation piece with HMRC, you know, sort of getting it to a you know, sort of a successful outcome. in that sense, it's quite difficult to get to a point where they do actually agree it, and where something is wrong, then, you know, sort of the penalty regime that is in place, you know, sort of is actually, you know, sort of quite inflexible, and we're seeing more and more of that. We will see more and more of that as MTD comes in. So making tax digital for those that don't know. But yes, I think that's probably something that's reflected in what you're seeing, isn't it, Chris?
Yeah, I think, again, I mean, there's certainly the targeted campaigns via Connect, and we've used the word Connect, you know, a few times. And again, it's this system that the revenue in place that I think the next slide will hit upon it, that pulls in all information that's available, and that is even to the point of bank accounts, as I understand these days, that the revenue, they've always had that information in terms of interest. Bank interest that's available, and what I've commonly seen is errors around there. So the revenue writing and asking or suggesting that items have been missed off a tax return, and this can affect the most simplest case in a tax return, where we do have clients that you think the affairs are quite straightforward, and who would normally say, I don't need this service because my affairs are quite straightforward. But again, that scenario of the Connect system supposedly connecting all this information and thinking that there's a bank account that's been excluded with some bank interest, to respond to that, you go back and you put a response to initially from the client, assuming no, we haven't missed anything off. You chase that up because it takes a number of months before the revenue seem to actually respond to those letters, and us being proactive will chase up, so we'll incur time doing that. And it may even fall down to actually, there was an account from years ago that we've forgotten about that's got £10 of interest in, so completely non-event, or there's actual another account in conveniently the name of Smith that is nothing to do with our client, and again it leads to nothing, or it's a very low level, and we're at the point of already at £600-700 of time costs in dealing with this. For a very simplistic case. So the Connect is there, it does work in other areas and things, but it just means that it brings in everybody into the equation, not, and as we'll see shortly, not just what you would think, larger corporates going over targeted tax planning. It can be very simplistic as well.
All right, so let's talk a little bit more about Connect, the Skynet system of HMRC, it would seem. What are they looking at?
Lots of things, I think, is the answer to that. So as I say, there's about 55 billion items of data being fed into that, and it's everything from, you know, sort of as Chris has suggested, that bank and building society accounts, you know, sort of right the way through to looking through other government departments, so Companies House, Land Registry. They are, you know, sort of certainly areas that we're seeing activity coming through from, but also, you know, sort of looking at, you know, sort of internet sites. You know, again, we've seen activity that's been drawn down from Facebook. OnlyFans, we had one particular practice that looked after a number of OnlyFans, you know, sort of members, and that has created a number of inquiries. eBay, so activity there, and then influencers, so, you know, sort of social media influencers, you know, influencers that you know, sort of can attract quite big fees from you know, sort of promoting marketing products, you know, sort of on the internet. So it really is a case of, I think there's nowhere to hide, you know, and you know, I'm just going back to the bank and building society accounts, things like credit card statements, and it is looking at very much, you know, sort of that whole affordability piece. Where's the money coming in? Where's it going out? You know, sort of, and joining the dots. I guess with, you know, sort of, again, using technology, it's really sort of an end-to-end transaction that they're looking for to match up what's going on.
So I think you've got, sorry, go on, Chris. I was going to say, I think we've largely covered the sources here, social media, as you say, even tax evasion helpline. Hopefully not too many of our clients are mentioned there, and even overseas data, I think it's worth mentioning as well, isn't it?
Yeah, I mean, there's various bits on there. There's interesting ones, social media this day and age as well. We have seen examples of revenue referring to social media posts that might be in exotic holiday locations and such. And going back to Sarah's piece about affordability, you know, it raises potential questions on whether it be complex or non-complex returns as to how these items are being afforded. So it's, you know, a presence anywhere. We fear these days the revenue have got the ability to pick it up, and it just this is not on the assumption that anybody's guilty. I think that's quite important. You know, our clients use our services and use us, and we're all trustworthy individuals, but there may be innocent mistakes, and there may be from both parties, and there's well, there will be costs involved in rectifying and in just communicating between parties, and obviously our service is meant to alleviate that.
I mean, just by way of example, we did have a client who was in one of the local newspapers because she'd sold a house, and she was talking about how she'd done it up and the pride she'd had in it. I can't quite remember if she'd won some award or something, but lo and behold, she then got an inquiry about whether she qualified for principal private residence relief on the basis HMRC said you clearly bought it with a view to making a profit. So, yeah, I guess people should be careful.
Yes, definitely, and you know, and again, I've seen an example. It's actually, you know, sort of a high-profile footballer who was in a glossy magazine one weekend, you know, sort of talking about buying his mother a property, and again, you know, sort of lo and behold, the next thing we knew is this particular footballer was picked up for an inquiry, and it was an insured client for us. So yeah, absolutely. I mean, you can see that information feeds through, and HMRC are looking at it. I mean, it's quite interesting. I was just having a bit of a look this morning, and you know, sort of they are, you know, they have access to transactions through Auto Trader, obviously the DVLA. So again, it's around that affordability piece, you know, things like flight sales, passenger information. So again, you know, sort of it's then looking at things like residency. So you can see how they're joining the dots on what people are doing and looking at a much bigger picture when they're opening inquiries.
Okay, and I think, again, we've touched upon this, but how they're using this data, Sarah?
Yeah, so as I say, a lot of campaigns, the sorts of letters that we're seeing coming out, they obviously pick off a particular area, profile for certain information. Again, it's that use of technology. So, you know, sort of letters coming out, you know, sort of to certain sectors. They've got invested in task forces to look at certain specific areas. Again, you know, sort of drilling down into what's going on perhaps in a particular marketplace, and then looking at whether that is then something that is something that, you know, sort of can be a targeted campaign. So, you know, sort of an opening investigations as a consequence of that. I think the other thing to sort of highlight is that we are starting to see more criminal prosecutions coming up, you know, sort of, and that again is the thing, you know, and a feature, you know, as again we've highlighted that the penalty regime seems to be more stringent these days. It's much more difficult to you know to negotiate with HMRC to reduce any penalties. You know, and this information is being shared across, you know, sort of all government departments. So, you know, I think, you know, it is something to consider, and naming and shaming people when they've done things wrong. I'm not saying that any BKL clients have, but I guess it just goes to demonstrate just how far HMRC are going to go in terms of trying to ensure compliance moving forward.
I think that's the key point, Sarah, that it is we're not working on the basis that our clients have criminal prosecutions or being named and shamed, but it's emphasising that there's a drive from Treasury, HMRC, government, etc., that they're really putting procedures in place to collect tax, because there are a lot of people out there that don't pay the right tax, and some of our clients are going to get caught into that process of asking the questions. And again, to clear it up, to resolve the matter, we'd rather that they don't pay that time out of their own pocket, and that actually, Sarah, it's coming out of Vantage effectively, or underwrites coming out of yours.
Absolutely. And I think, you know, sort of just going back to the point that we had earlier about this sort of, you know, the tax evasion hotline, you know, and they get an average of 200 calls a day, which then trigger inquiries. And that in itself is quite interesting. We see particularly, and again, it's probably, you know, sort of a disgruntled employee who thinks they're not perhaps being paid something like the minimum wage, and typically those inquiries come come from that. And actually, more often than not, yeah, they are, but it's just their perception. They've had a conversation with somebody, perhaps they're, you know, disappointed with the way things have gone, and you know, that's just one example of where, you know, sort of that sort of thing comes into play. But yeah, definitely
we've heard of the same situations of employees, disgruntled employees. I think neighbours has come up as a worry, somebody as well. You get in a dispute with your neighbour. For some reason, they might decide to phone a tax evasion helpline. So yeah, we've heard some examples.
Yes, yes, absolutely, yeah. And I mean, some of them are quite, you know, they're quite ridiculous, but again, it stimulates, you know, sort of I guess that responsibility for HMRC to investigate, and of course, you know, then that involves the you know, sort of the likes of BKL to deal with it.
Yeah, and I think the days of being able to phone up an inspector and saying, well, you say this, I say that, let's meet in the middle and we'll all agree over a sandwich and we're done. Sadly, not here anymore those days.
No.
So
Long gone.
So I think the message is loud and clear. It's, you know, HMRC are getting more aggressive. They've far more data sources in which to pick out information, and that leads not only to picking out people who perhaps have not made full disclosure, but also, as you said, Chris, a bigger risk of error. So this is very, very relevant. I guess, Sarah, to get to the key points now, as it were, what is covered by this insurance?
Okay, so I mean, and that's a snapshot of the areas that are covered by the policy. But what I would say is it covers the majority of scenarios where you're going to get a review or inquiry from HMRC, and it doesn't have to be a formal notification. You know, so I started in fee protection, you know, as I say, over 20 years ago, and it was very much a case of that it was, you know, sort of you had to have that formal notice. To be honest, very few inquiries come out in that guise, and certainly initially these days. And so it is quite often just a question or, you know, a few questions that come through that then develop into something else. But then there are the bigger cross-tax inquiries coming through. We're definitely seeing more of those, you know, sort of where they're looking at multiple avenues. So be that the corporation tax, pay-as-you-earn, VAT, all of those things knitted together. And that creates quite a sizable issue for you know, sort of to deal with. But yeah, so you know, £100,000 worth of fees for any one claim. So you know, sort of in that sense, we do see them that reach that level for sure. You know, again, just some of the more complex, you know, sort of inquiries. But yeah, literally covers from start to finish. And in reality, you know, sort of what we want to see is the involvement from BKL from the outset, so that it does, you know, sort of really sort of make sure that it gets dealt with correctly and as efficiently as possible.
Now, one of my little niches here, Sarah, is R&D tax credits, which I think illustrates the point very clearly. I mean, I take it that would be covered by the insurance as part of the tax return.
Yeah, I mean, an inquiry into an R&D claim that was put together by BKL would be covered. If it's in the marketplace, there's the number of boutiques, and normally they will pick up the inquiry where they've dealt with it.
Yeah, but I think the point I was going to make was, you know, we are seeing far more aggressive inquiries from HMRC in this area. And as we said, not only seeking to reject claims and reject them in full, but also raise tax year penalties. So again, this is when, you know, there's no, as I say, meeting HMRC in the middle here. We have to deal with these inquiries robustly, and that's where the insurance can be very helpful. So
absolutely. I mean, I know. Go on, sorry.
Go on, Sarah.
I was just going to say, with regards to R&D, it's a shifting marketplace as well. So we have to be agile, I think, and that's, you know, that's the point. So we have to trust you to, you know, to do what you feel is appropriate. You know, there's going to be quite a bit more case law, I think, comes through as far as that goes as these cases develop.
All right, thank you. So what's not covered though, Sarah?
Okay. So I think, you know, it goes without saying, you know, and any insurance is not going to pick up where it is a fraud procedure. So normally under Code of Practice 9, so that wouldn't be covered. Late tax returns, we cover up to 90 days late tax returns, but if it's submitted late, then that's not normally covered. it covers HMRC inquiries. It doesn't cover, you know, sort of those outside of HMRC's jurisdiction. Doesn't meet any tax, interest or penalties, you know, so it is really just about the fees in terms of dealing with an inquiry, getting rid of it as quickly as possible, and then thinking about some of the aggressive tax avoidance schemes. It doesn't cover those. And again, you know, sort of more often than not, you know, sort of that would be picked up elsewhere. I think the important thing, sorry.
No, I was going to say, Sarah, I think for me, the important part of this slide is really, because we have had the question before about, or not question so much, but observation from others about fee protection, and people thinking that actually I might choose to leave a few things off the return and etc., and try and get away with it. And if I get an inquiry, it's fine, BK will deal with it, and I only pay the tax that I would have had to pay anyway. Some have actually asked or thinking that this would cover tax as well, which obviously it's not going to cover any tax or penalties. So, you know, you've got to make sure that's really there. We have to still complete as we do. Everything's still correct on a return, and there's no hiding away from it, as you wouldn't be covered from this. I'm not sure we should have included about the 90 days late. I think we should have said that actually to be covered, you've got to get the return in prior to 31st December, maybe, you know, but the reality is that is there, 90 days, but we certainly don't encourage late returns going in. We still want to make sure everything is in on time.
Yeah, absolutely. I mean, at the end of the day, one wants to avoid an inquiry, regardless of whether it's covered by the insurance or not. You know, sort of just for that, you know, sort of the lack of sleepless nights as HMRC spotlight on you. I think, yeah, the important thing is it's not there to correct returns that have been incorrectly, you know, submitted. Obviously, there's always going to be one or two things that may need, you know, sort of adjustments slightly, but the reality is that it should be that, you know, sort of a full disclosure has been made on the tax return, as would be expected.
Okay, now we might think that HMRC would merely be targeting the very large businesses, the ICIs of this world, but that's not the case, is it, Sarah?
No. I mean, there's been quite a bit of you know, sort of feedback, you know, sort of from HMRC's steering groups, and I think, you know, sort of there's a view that actually the area where there's the most risk of unpaid taxes is within the small to medium-sized businesses. And I guess, you know, again, just thinking about sort of some of the developments that are going on in terms of making tax digital, that is to bring forward that information, that reporting, you know, sort of that small to medium-sized businesses make, so with a view to minimising that. But yeah, so this slide just sort of highlights actually, you know, sort of where, you know, sort of small businesses sit, you know, and the estimated tax gap for them, which, you know, sort of comes out at, you know, sort of 15.1 billion, but actually they're spending 480 million on trying to, you know, trying to deal with that. So I think, you know, sort of it does highlight where they think there is an exposure. Moving on to the next slide, you know, sort of just thinking about then the medium-sized business, you know, sort of actually they're only spending then 260 million on compliance. But actually the risk is perceived to be lower, and as they move further up the chain, you know, sort of, I guess as more regulation comes in, that you know, sort of they don't see the risk as much. I don't know, some of the headlines that we see in the newspapers wouldn't necessarily always agree with that, but I think that's where HMRC's focus is, and for your clients, you know, sort of those that perhaps wouldn't think that they're necessarily blipped on the radar of HMRC, they do.
Yeah, I think adding into that, Sarah, so again, I mean, we've seen previously in our eyes, I mean, any corporate certainly should have this cover because of the number of areas where revenue could write, you know, and we look at PAYE, corporation tax, you know, R&Ds if it's in there, VAT, etc., even just doing a PAYE inspection. There's so many areas that they could pick up on. As we've talked about, there's a number of ways they can do that. So we've always kind of said, just as a corporate, you should always have this. It's not inexpensive, and we'll come through to that later, but it's not a huge thing that should happen. We have in the past, it's been difficult with the smaller size clients as individuals in their own right, or smaller size sole traders and businesses where they've kind of said, well, I don't really have, you know, everything's right. And again, we've touched upon this already, but the revenue do see that as a big opportunity. There's a massive tax gap there. So regardless of whether it's right or wrong, in most cases right, but you've still got that potential for that investigation, which if they get their teeth in a little bit, they want to take. And yeah, that's my point now, is that for, again, this relatively small cost, it's offering that service. And I really think it should be mandatory to all cases now to have some level of cover. Otherwise, it can just spiral.
Yeah, no,
For
fair
sure.
point, Chris. All right, should we talk through a couple of examples then of the type of inquiries we've had to deal with? So,
Yes.
Sarah, over to you.
Okay, so I've just picked out a few examples of the sorts of things that we see on a regular basis. Just as much as anything, I think it puts into context, sort of what's going on, what we see, how costs can spiral, and obviously the relevance of signing up. So in the first instance, sort of just thinking about this is what I was mentioning earlier, was a cross-tax inquiry. So in this instance, they've brought in corporation tax, personal tax, so they're looking at the director's own individual returns as well as the corporation tax return, the VAT returns and pay as you earn, and then obviously the interconnection between those. This started in January 2020, so pre-pandemic, and it's ongoing. So started out, sort of in the normal way at that stage, which would have been, sort of a meeting with the various, sort of heads, and obviously the business. As a consequence of the pandemic, it then sort of moved to much more correspondence based and sort of online. What the accountant dealing with this particular inquiry, sort of has highlighted to me is actually how those departments have not communicated terribly well between themselves. So, sort of those the VAT officers not talking to the corporation tax officer, the information that they're pulling out is, sort of, it's not really sort of being matched up. So again, he's having to spend more and more time dealing with this particular inquiry and conveying messages across, sort of the different departments within HMRC, with sort of, I guess, also a range of delays, changes in officers. Again, it's just more and more time chasing up, just trying to get this to an outcome and a settlement for the client involved. At the moment, it feels like the other bits have switched off and VAT is the focus. Again, sort of waiting to have an update, and I think that was for a meeting that took place in November last year. So it's just very, very difficult to try and get this resolved and obviously provide assurances to the client, sort of, and again, just going back, chasing HMRC every time he does that, that's incurring extra costs. So, they're up to 24,000. They need some more fees, which have been approved this week, and it's just going to keep running until all of these areas they're satisfied.
Okay, so we've got another example here that was, though, slowly focused on the VAT aspects, though, Sarah, wasn't it?
Yes. So this is a slightly older case, but quite interesting, and again, just focuses in on trying to get HMRC to understand actually what's been done, what the business does, and really sort of the classification. So in this instance, it's very much around the cosmetic, sort of medical area. So it was, sort of looking at the application of the VAT rules, which are different in terms of, sort of what's a medical procedure and what's a cosmetic procedure. And again, sort of really getting into the nuances of what, is actually being done there. Is it, perhaps somebody that's had a burn that needs something that's being dealt with as a medical issue, rather than, sort of somebody who's decided they don't like the lines on their face and therefore they're going to have a treatment there. So that, again, sort of was it took longer than expected to be resolved. Sort of, again, sort of we're looking at sort of circa 4 years to do that. It was delayed due to the pandemic, and actually as a consequence, HMRC backed down because of time limits around some of the assessments that they issued. But again, sort of the costs were incurred by the accountant in getting it to that stage.
Okay, and our final example is a personal tax client.
Yes, so this is an inquiry that's ongoing with us. It started in April last year. HMRC have now extended it into a later year, and it is very much letter after letter, gathering more and more information. Again, just thinking about the client involved is, is that they're clearly sort of digging into areas of domicile, where they're resident, thinking about their income sources. But actually, we've seen in the letters asking about who they meet up with, when they go on holiday, how much time they're spending away, sort of who they stay with when they're away, and actually they haven't actually come to, sort of any real conclusion. It's just, question after question after question of great long, multiple page letters that are, sort of racking up fees. And in reality, it's information that sort of the revenue may or may have had at some point.
Certainly, that's the one that scares me. Is the third one there with the, say, 17,500, and there's no actual at this point incorrect treatment anywhere.
Yeah.
Astonishing.
Okay.
But it gives a snapshot. It's a snapshot of some of the things that we see, but we see, a wide range of inquiries coming through.
Okay. Well, I guess to sort of summarise, the first point, a couple of people have actually messaged in on, even if you've done nothing wrong, you can still be selected. HMRC do random inquiries, even to the most high-ranking and decent, honest people out there. So you may just be unlucky and get an inquiry. So don't think just because my affairs are simple, just because I'm absolutely adamant that there's absolutely nothing wrong on my tax return, that you shouldn't even think about the insurance. You may still get an inquiry, and it may be an expensive inquiry. So it's certainly worth thinking about the insurance for the peace of mind. And just one other thought from me is, I've been doing this job for, 30 years now. It's certainly not getting any simpler, the tax code, and the complexity of the issues, and therefore the risk of inquiry and challenge is only increasing. So yeah, I think it's certainly worth the peace of mind, and gives you absolute assurance that the inquiry can be dealt with as robustly as possible by your tax advisors. But okay, a couple of thoughts from me. Sarah, do you just want to pick up the rest?
Yeah, absolutely. So I think, sort of as we've highlighted, you can't be too small or too big for an inquiry, and sometimes even the smallest ones are the ones that become the more time consuming, and complex. So the policy, provides up to £100,000 worth of fees for the issue to be dealt with, and as I say, in most instances, it's way more than enough. So there's going to be no additional cost.
Sarah, can I just ask up to what level of inquiry the insurance covers? Does it take you to the first tier tribunal or beyond there?
Yes, it's up to first tier tribunal level. So yeah.
Okay, thank you.
Okay. So yeah, and I think the inquiries we're seeing are just becoming more and more time consuming, and in terms of obviously there is a push, as we've highlighted, as a post-pandemic world, to bring as much money back into the exchequer. I think just going back, and a lot of it is, as I say, computer generated, and it can be as a result of poor or mismatched data, and that in its own right, just trying to get them to recognise that it can be difficult to do. So yeah, and then the final point, obviously, I think it goes without saying, the cost of dealing with an inquiry doesn't form the part of most of the routine fees, so therefore it is a really important service that I think for clients of BKL to take.
You're on mute there, Tony.
Apologies. The one question we haven't answered today is the cost of the insurance, Sarah. How does that work?
Well, it's as with most things where there are areas of risk, it's risk dependent, and also we do have a number of clients where circumstances are different. So the cost for an individual with low income is obviously very different to a large corporate. So at this stage, it's not a publicised list of costs that we have for this meeting. It's really for our clients who really need to engage and talk with your BKL contact where you're interested, and we provide the costings.
But I think I'm going to stick my neck out here and say they are very, very reasonable. I mean, for broadly an hour of my time, for example, that would probably be the insurance cover for
exactly
the year,
that,
in many
Tony.
cases.
Yeah, exactly that. I mean, we're comfortable that to go back to revenue particularly deal with one letter, whether it be on a simplified or a complex matter, the cost of the service is lower than the cost I'd expect from a response to a letter.
And we can cover groups. And does that also cover the shareholders or directors, Chris?
So with the corporates it's covered, we also cover the directors for personal, as long as we're completing the personal returns. As long as we're completing them at our end and submitting at our end, and we're engaged to do so. We're also, if we're engaged to complete personal returns and we didn't complete the prior return, Sarah will confirm, but I'm pretty sure we're covered for the prior year as well, even if we didn't complete the return, but we are engaged going forward.
Absolutely. Yes,
perfect.
Yeah, that's for sure.
That's one that normally comes up. And yeah, it's ultimately there's a number of different circumstances of who aren't covered, but we like to think we cover most instances and most individuals and corporates.
Okay, thank you both for that. I think we can probably summarise all of this. It's just very very efficient and reasonable way of giving you peace of mind over your tax affairs should you get an inquiry. So do speak to your BKL contact, and I'm sure Sarah will be happy to deal with any inquiries you've got. So unless either of you have any other thoughts you'd like to share with us, I can only thank Sarah and Chris for their time and their thoughts today. Thank you all for listening.
Thank you.
Do please drop us an email if you've any further questions, but we will circulate a copy of the slides and the link to this webinar again, just in case you missed anything. And do please consider it, because absolutely it might be the best few £100 you've ever spent, I can assure you. So thank you all for your time, and please do join us again next time for our next webinar. Take care, everyone. Goodbye.
Bye.
Bye-bye.